In today's video, we're going to look at a few more analyst reactions to Tesla's epic Q3 earnings and the outlook for the future over the next couple of years. But before we do that, I have an important reminder for everybody watching. Don't bet against Elon Musk, which, funnily enough, happens to be the best-selling piece of merch by far I've ever sold in the merch store. A couple of days ago, the guy posted this: a very quick time in the pit in Diablo 4. Don't worry, I do have a point here. As I noted and pointed out here, bro is out here casually posting global top 30 times on the Diablo 4 pit leaderboard. Obviously also simultaneously running a bunch of multi-billion-dollar companies, having a fuck ton of children, and so on. This time, not kidding by the way, would have put Elon Musk at number 26 on the global leaderboard in a video game, one of his favorite recreational activities. That's not where this story ends. After posting this, Elon himself notices something and says, "I notice you're ahead of me. Can confirm." At this point in time, I realized, well, I'm fucked, aren't I? So I respond, I'll enjoy it while it lasts, knowing inevitably where this is going to end up. And then this happened. I take one day off from the pit, and this happens. How it started: Elon, I notice you're ahead of me. How it's going: motherfucker equaled my time, technically sitting above me on the ladder. I knew this was inevitable. Now, the reason I'm mentioning this is just to point out, this motherfucker is so competitive, driven, and focused. Not only is he competing with the best in the world in Diablo 4 in terms of pit clear times, super nerdy, I know, but I just knew what I was in for. As soon as I saw this comment, I noticed you're ahead of me. Now imagine being somebody leading a company in the same industry as one of Musk's own companies, whether it's Tesla, whether it's SpaceX, Neuralink, who cares? You may as well just throw up the hands, wave the white flag and say, I give up now already, because you know what's going to happen. Don't bet against this guy. He's just built different. The reason for this very long introduction is because at this point in time, there's still a huge amount of skepticism as to whether or not Tesla, A, can solve autonomy, B, if they can do so in a reasonably timely manner, and C, a lot of analysts, for some strange reason, actually believe that companies like Cruise, maybe not so much Cruise anymore, and Waymo are meaningfully ahead of Tesla in autonomy and don't seem to understand the distinction between what Cruise, Waymo, etc. are doing, e.g. something that will not scale widely and something that doesn't have an incredible, unassailable data lead, and Tesla's generalized solution to autonomy, giving a lot of false perceptions. As I've said before, Tesla will win autonomy. They have an unassailable lead. It's game fucking over. I can see it coming before it's happened. Most analysts on Wall Street still don't recognize this. Now, how do I know? If they did, their fair valuations for Tesla would probably have an extra digit in them, but they don't. Now, with that said, let's see what said analysts have to say about the company following the Q3 earnings. And I do just want to add, it is kind of embarrassing to be beaten on the pit leaderboard by a guy who has 17 fucking jobs. I mean, it's just straight up embarrassing as fuck, let's be honest here. Okay, clip one.
Price target on Tesla, you were at $254, you're now at $278. What was the catalyst? What did you see in here that made you want to move your price target higher?
It was a few things. First, the margins were exceptional. And if you recall, over the last several quarters, Tesla's auto gross margins have come down because they needed to cut price based on weakening global auto sales because rates went up. But now they had an incredible quarter.
Just really quickly want to say, hey, credit where it's due. The guy recognizes the challenges in selling through production at previous prices in the automotive industry caused by sky-high interest rates, unprecedented rate rises, as opposed to Elon Musk having opinions and sharing them. Nice to hear.
From a margin perspective, much better than anyone thought because the costs of production came down to levels that they've never before seen. That was the first thing. The next couple things were, despite skepticism, they reaffirmed that they would be launching some lower cost models in the first half of next year. And as you played, Elon Musk said they would grow sales probably 20 to 30% next year. What that means, what's very, very important for Tesla stock, is that the revenue and earnings growth are going to reaccelerate. And if you follow the growth rates of revenue, that stock very closely follows them. So if we see that reacceleration.
Okay, so I just want to make a quick point here. George, probably correct. The surge we saw in Tesla stock, give or take, up 26% in a couple of days following a slight improvement in gross automotive margins and the expectations that Tesla will sell a few more vehicles next year, really boiling down to, well, Tesla revenue and earnings going up means stock surges. So riddle me this. Given the fact that I personally believe autonomy in terms of the profits and revenue and growth is going to absolutely dwarf Tesla's entire automotive business, just play along at home here. If this actually does take place, as opposed to seeing a 10-20% increase in revenue and potentially profitability as well. We're talking about a 100, 200, 300, 500%, 1,000% increase in Tesla's profits based on autonomy. How might the stock react in that situation when people figure out, oh, okay, there are going to be future profits, there will be revenue growth, and the company will be printing absurd amounts of money? Of course, this is totally hypothetical. Tesla's not in an unassailable lead with autonomy. They won't absolutely dominate. They won't be printing money. And they didn't remind us that they plan on and expect to have approval for the first Tesla Robotaxis, Model 3s and Model Ys, operating in both Texas and California and probably other states in the United States literally next year. Nor did they mention volume production of the dedicated Cybercab Robotaxi in 2026, a little over 12 months from now. So I don't know why I'm even mentioning this hypothetical scenario, but I just like talking about totally unrelated things after we see Tesla stock rip on the back of some slight improvements in the automotive business.
Which we saw since the first quarter, we're going to see Tesla stock continue to outperform.
I want to go to margin. This is a company that trades on margin. Even though it's a tech company, it kind of trades on margin like an auto company may. Minus those credits, it beat margin by quite a bit. The estimate was 16.3. The actual was over 17%. What does that tell you about this company?
By the way, just for the sake of clarity, autonomy, based on my own estimates and a few others out there like ARK Invest, we're not talking about give or take 17% margins. We're talking about 50, 60, 70, 80, 85 plus percent. Just putting that out there.
Company going forward. Does that also settle some of these thoughts that Elon Musk is distracted? We've seen him on the campaign trail. We know he has other enterprises. Does this settle this in the mind of investors, at least in the near term?
At least in the near term. What the company has said, what Elon Musk has said consistently, is that their competitive advantage will be manufacturing, the machines that build the machine. And they continue to show time and time again that they're able to lower the costs of production and be the only or one of the only companies in the world that can make money in electric vehicles. So this is
He's right. At this point in time, Tesla probably the only company making any money selling electric vehicles. There was a period of time recently where a couple of Chinese companies were making tiny profits, but due to rates being through the roof, challenges selling through production, prices have come down. Tesla sort of leading the charge there, no pun intended. There's probably no other company on earth beside Tesla actually making money selling electric vehicles. And in the future, 100% approximately of all new vehicles sold / produced will be electric. And as we've seen, Tesla's cost of goods sold come down quite a lot. Margins now approaching 20% again on the automotive business. They have huge, extreme pricing power, where others have negative margins, negative 50, 60, 70, 80, 100, 200, 300, 400%. By the way, I'm not exaggerating. Some of these companies losing 2, 3, 4 times the cost of every electric vehicle sold. It's bonkers. Going back to the earlier point in terms of why you do not want to bet against Elon Musk, I do not envy automotive manufacturers, electric or internal combustion engine, trying to survive the next 5 years. That's not to say anything about autonomy.
Consistent story behind Tesla. Their cars are great, but what they really have mastered is the ability to make them, and that showed up last quarter.
Okay. Let's talk about the broader sector right now on two different angles here. Number one, EV stocks, they're up right now. We're seeing Lucid's up, Rivian's up, but the Chinese EV makers, they're all
something, the bell curve is real.
Also up. At the same time, we're seeing Lyft and Uber down. I believe that's tied to some of the Robotaxi announcements they made during the call. Just kind of give us some color on both of those, how you see Tesla influencing both the EV market and also the ride-hailing market.
Sure. So over the last several quarters, people have been concerned that the EV market has slowed down, and that's fair because it has. But we actually put out a couple of interesting notes about what's happening in China. In China, ICE vehicles, traditional internal combustion engine vehicles, those sales have collapsed.
There's that word. I was about to jump in here and say, I know what's coming here. We're going to listen to that again. Shouldn't have interrupted, but there's a very important point here. China is not only the world's largest automotive market, it's the most mature in terms of EV adoption. It is a leading indicator of what the rest of the world will do. So listen carefully to what we're hearing, because China is a peek into the global automotive market's future.
We actually put out a couple of interesting notes about what's happening in China. In China, ICE vehicles, traditional internal combustion engine vehicles, those sales have collapsed in 2024, and EVs are actually doing well. We think that's a sign of things to come for the Western world as EVs continually proliferate. So that's the first thing. The second thing on autonomy, look, we're massive believers in autonomy. We think the future of mobility is autonomous. We agree with Elon Musk.
I can sense a but coming. By the way, he absolutely nailed China. I've got to say, it's nice to be agreeing quite often with an analyst discussing Tesla. But I feel a but's coming here. E.g., Tesla's not going to be dominant. There's going to be lots of players. Others are ahead. Some shit like that. I don't know. I just kind of sense that's coming.
We disagree with some of his timelines. So he was out there yesterday reaffirming that the Cybercab will begin production in 2026 and traditional Tesla vehicles will be able to operate autonomously starting next year. That's put pressure on some of the ride-hailing stocks. But we're big believers in both electrification and autonomy, and those are the two areas where Tesla is focusing a lot in the near to medium term.
You know, George, very quickly, we got to get out of here, but I got to correct myself. When I looked earlier, Li Auto, Xpeng, they were up. Now we've seen they reversed. They're in the red. These Tesla results, is this putting pressure on their business now?
Look, what we've seen consistently from China over the last, call it 9 to 10 months is that EV sales are picking up and ICE sales have collapsed. So the future is electric. The difference, though, between Tesla and many of its Chinese competitors is Tesla can make money. And ultimately,
Bro, some facts have been spat there. And this is very, very important. If you don't make money producing your product, you do not have a sustainable business model. And that's all good and well if there's no company like Tesla massively and aggressively driving their cost to produce goods down and being able to pass those cost savings on. But the problem is Tesla does exist. They do have a massive lead. I mean, most of these companies in China, their gross automotive margins, we're talking negative 2, 3, 5, 10, 15, 20%. Tesla's making nearly 20. There's only so long these companies continue burning cash, raising money, before they simply go out of business.
For long-term staying power, that's obviously very important. So Tesla has proven it can not only grow and make a really good product, but they can do it at a price and with a manufacturing that consistently makes profit. So that's the difference between Tesla and some of its Chinese competitors.
And now, the second clip, Dan Ives.
I know you're going to want to talk about Palantir eventually, but let's talk about Tesla because those numbers are out now. Revenues are light, but hey, earnings. What matters more here?
I mean, the whole story is about gross margins. I mean, that's really been the headwind on Tesla stock. I'd say $30 to $40 of a headwind to the stock. You saw gross margins. I mean, this is a blowout. Not even us thought that we could see a gross margin where essentially is anywhere from a 200 to 300 bit beat. This shows price cuts now under control. Margins start to tick back up. You start to get now toward 20% gross margins. I think this is the start of the stock ultimately. This will have a 3 in front of it as a stock as the gross margins start to trend up and as well as growth into next year from a delivery perspective.
So again, I just want to emphasize Dan's comments about Tesla stock soon starting with a 3 in the $300 range, just on the back of a slight improvement in their gross automotive margins, 17-ish% again. Autonomy, we're talking 50, 60, 70, 80+%.
Does the Robotaxi stuff matter?
Look, I think longer term, we think the longer term story here is autonomous, is robotics, is essentially the AI play. Street, what they needed to see here, show me margins. You cannot have margins going toward 13, 14%. Now that margins are starting to level off, that is so important, not just from a cash flow perspective, but showing the worst is in the rearview mirror. And when you think about all the bears and all the negatives, it comes down to deliveries will start to uptick. China, I think, is a source of strength in the quarter. But that gross margin, it's a Goldilocks for any bear. Okay, it's a Goldilocks for any bull. The bears, it's kind of a nightmare for, because that was ultimately the core of the story.
Yeah, to your point, free cash flow, $2.74 billion. That trounced expectations for Q3. But some of the details we're getting here on the outlook, I think, are also really notable. They're basically saying, despite the ongoing macroeconomic conditions, we expect to achieve slight growth in vehicle deliveries in 2024. Also talking about energy storage deployments that are going to more than double this year. But perhaps this is most notable because I know you've written about this, saying plans for new vehicles, including more affordable models, remain on track for start of production in the first half of 2025. What should we take away from that when I know a lot of folks have been looking for a sub $30,000 vehicle? We're even expecting.
So I've got to stop here again. I just want to point out the amount of discussion that we've seen after Tesla's earnings, vehicle deliveries, gross automotive margins. That's all anyone seems to want to focus on, which is a tacit admission that no one actually believes Tesla when they say that they personally predict that Model 3s and Model Ys literally next year, a matter of months from now, at most, call it like 12, 14, 15 months at most. So Model 3s and Model Ys will be operating autonomously as robotaxis next year. No one believes this, otherwise it will be the only thing they're discussing. They'd be talking about the implications. Cost per mile, which Tesla talked about at their autonomy event. Number of vehicles on roads, demand. Like, it's just so obvious that no one in the mainstream media and none of the analysts covering the stock truly believe, even close to believe, Tesla's timelines. And George, earlier in the video we saw, he said he doesn't actually agree with their predictions. But what if they're right? What if they hit their target? What if the analysts out here who are essentially betting against Elon Musk turn out to be wrong? As I said earlier, I don't recommend betting against the guy.
Expecting to get some details on that at the Robotaxi event, which maybe was unrealistic.
The linchpin to the story from a growth is a sub 30K vehicle. And I believe that hits by middle of 2025.
See, as I said, the linchpin to the growth in Tesla is not the fucking $30,000 vehicle. It's autonomy. Easily an order of magnitude more in scale than their entire automotive business if it's absolutely booming.
That's the growth. I mean, that's ultimately, you're talking about like single digit growth this year. That's how you get to 10, 12, 15% type growth. Margins under control. That's what the bulls want to see. And I think the fact that they actually doubled down on, and I expect clearly on the conference call, they'll focus not just on margins, but more details around that vehicle. Look, Robotaxi Day, we could argue, many would say that they're disappointed. I believe ultimately that shows the vision, the autonomous and the AI vision. Street need to ultimately see, stop talking the talk, walk the walk, show the margins. They did it. And Musk really has, I think, stepped up in that capacity.
In what's been a year of softness for EV demand and obviously more adoption of hybrid vehicles, for example, are we going to look at Q3 as an inflection point for that changing, especially when you look at results like this today? Or is this a Tesla-specific story as they do deploy more manufacturing techniques, more software, more AI, both internally and externally?
I think it's a combination. I mean, you had you look at GM's quarter. I mean, that was a Juan Soto-like quarter for GM. And then you look at what we've seen in terms of Tesla. I believe this is the inflection point. This right now is the start to me of what we're actually starting to see from a gross margin perspective. The renaissance of growth come back. They've essentially been in between two growth waves. Next year, you have a sub 30K vehicle. Then the autonomous and AI vision plays out. And that's, in our opinion, that's how you get to trillion and a half market cap. And right now, as we've seen, look, New York City cab drivers bearish on Tesla.
Okay.
And I think that's a good setup relative to what we see in the next 3-4 quarters.
I know I'm repeating myself. There is a reason. A couple of years from now, I will have done literally everything possible to share what I think is around the corner before it happens. So the key takeaway, none of the analysts covering Tesla stock, none of them believe Tesla's publicly stated goals. Not only do they not believe them, but clearly, tacitly, through their fair valuations for Tesla, can't possibly believe they're even slightly reasonable. They must all assume it's going to be many years, half a decade or more, before the first autonomous Tesla vehicles start taking people from point A to point B. I think they're wrong, but even if they're right, I'd rather be buying Tesla stock today, market cap $850 billion, than buying in the future after investors have more widely figured out how profitable and dominant Tesla's Robotaxi business will actually be. Want more content? Early access? A bunch of perks? Click the links in the pinned comment. AG1 is awesome. I've been taking it daily now for more than 3 years. It's a great way to fill in nutritional gaps. It's packed full of vitamins, minerals, and whole food source nutrients, plus has prebiotics, probiotics, and adaptogens to improve gut health, regularity, and help your body handle stress. I'm always looking for an edge to help me feel and perform my best, which is why I haven't missed a day of AG1 for more than 3 years. Just try it and see how you feel. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs. This is what viewers of the channel had to say after trying AG1. I feel like I have a lot more energy since I started on AG1. Just got my AG1 in the mail. Legit feeling the effects after day 3. 3 months ago, I started AG1 and have been enjoying the evenness of alertness and energy that lasts the day. I just started the wife on it too. Are you convinced yet? I mean, hey, it's worth trying, right? Click the link in the pinned comment or head to drinkag1.com/SMR, or I can keep going. This viewer, after about a month on AG1, definitely a lack of fatigue in the afternoon. Pleasant side effect is that my coffee intake has imploded and is almost down to 0. One more? Yeah, why not? I honestly feel younger and will be continuing to use AG1. This stuff really is crazy good. I didn't think it would be, but this stuff is awesome. It really is what everyone is saying. One more? Don't mind if I do. I've just received my 3rd month supply. I've drank it every day. I have so much energy throughout most of the day. I'm productive, started a new business, started socializing, refurbished a boat. It's no coincidence. Thank you for your persistence, your integrity, and your insights. Now look, these are not my words. These are not my testimonials. This is what you guys and girls are saying. Maybe it's 100% placebo effect. But even if that's the case, I think it's money well spent. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs.